Hello everyone. Good morning in Europe. Good evening in United States. This is Ahraf with another daily outlook video. As you know, in this series of videos, we are looking at the market to see what's happening in the market, what is going on, and what is our expectation for today's from financial markets. Happy Martin Luther King. As you know, today most of the markets either they do not work, either they will be closed a little bit earlier. So market in the US, market in Europe, they're gonna work. We are having the normal working day in the Europe, but in the US, as you know, it's the half working day. First of all, let's check what happened in the market today. Actually, the week started with an amazing reaction from the People Bank of China. Stop, please. From very yeah, we had a very interesting reaction from People Bank of China. Let's see what happened first last week after our morning video. As you know, last week ended with the weaker than expected U.S. retail sales data. Retail sales data was not as good as it was expected, and at the same time, we had the Michigan University data from the market expectation, the market consumer expectation, and sentiment. Both of them also they were weaker than expected, under 70 and under market expectations, and under lower than the previous months as well, under the level less than the previous months as well. Both of them they are telling us that the retail says the people they are not ready to spend much money, and it is the finally the reason and the reaction of the higher inflation. When the inflation is increasing, the people they do not want to spend much more money because the things are getting much more expensive, and the people they do not have much more money to spend. That was the reason, one of the main reasons to see retail sales in a year in the US to be a little bit weaker. At the same time, today in China, in Asia, we had the Chinese data. In China, we had a kind of the mixed data. While the GDP in China increased much more than expected, I personally was expecting to see the GDP to fall down to 3.5, 3.6 for the fourth quarter, last quarter of 2021. But the data shows that the GDP increased to 4%. You know what? The reason when I'm looking, you see that okay, the reason was much better than export. While the retail sales and domestic sales in the country in the China is decreased, at the same time export increased, and these higher export, which we saw in the December numbers, very improved. It was very impressive number. Probably, most probably, that was the main reason to see that the GDP is increasing, because domestic sale was much lower, as we can see in today's published retail sales data. Retail sales in China fell to, let me say that, let me check the number. What was exactly no? Yeah, retail sales in China in December increased just 1.7%, while market was expecting for more than 3.7% increase. And the last month in November also we had 3.9% the retail sales increase in retail sales. So the speed of increasing was much lower than expected, and it was the negative news. And I say while the GDP increased, when the GDP increased by 4% in the fourth quarter comparing with year ago, and on the quarterly change just like 1.6% just in the fourth quarter of 2021. This data was kind of the mix, but however, it seems that like People Bank of China priced more on the retail sales. That's why they decreased the interest rates for some of their loans by 10 basic points. So that was the interesting reaction that I was talking in the beginning. Let's see what's regarding this. What happened in the market? I mean, what with this? What happened in the market, and what was the reaction in the market, and what we have to expect? Don't forget that this week we will have a very heavy week. We will have the too many data, inflation numbers from many countries. You will gotta have the weekly outlook video in 2 or 3 hours. Will be uploaded in 2 or 3 hours in this YouTube channel. So you're gonna see that. We're talking that there about the most important events in the week. But remember that we're gonna have very heavy week with the view of the economic data. So let's see the market. So this is the different. Let me show you first the VIX chart. This is the VIX chart. You can see the VIX in on Friday before market closes a little bit decreased, but totally the VIX, the total is still after a few days lower market risk. The risk again is increasing. This increasing generally risk in the market on the last day of the week caused the US dollar to re-increase again above 95 while it was trading under 95. Again we encouraged above the 95, and we can see in a day trade chart, in a 1 hour chart, that again it is back to the EMA crossing strategy shows us the uptrend, confirming the uptrend. Generally, again, if we are back again above 95, especially if we can pass the 95.50, from the technical point of view, also US dollar will increase. But totally increasing the risk in the market can tell us that we can see higher numbers for US dollar. The increasing risk in the market is one reason, and another reason that we know that the market is going again. The market expectation from the Federal Reserve and Fed decisions is a little bit hawkish decision. So therefore, the hawkish decisions with the rebalancing with the the balance sheet in the Federal Reserve balance sheet also is one of the main points that these days we are talking too much. We are hearing too much about that, and for next 2 3 months it will be very very important. As we know, the U.S. debt it's already more than $30 trillion. So the government, actually the Fed government, the Federal Reserve, not the Federal Reserve, the federal government is the dips is more than 30 trillion US dollar, and it is not what the market, what the government wants, and most probably the balance sheet it will be a little bit different. They're going to be a little bit tighter in the balance sheet, and that probably will make a little bit hawkish policies for the government and Federal Reserve. Therefore, we can see the demand will increase for US dollar. That will be the reason. At the same time, in China, today also we had the yeah, but let me go one by one. On the gold, this market risk, increasing market risk again helped the gold price to a little bit increase after falling earlier to 1,813 and last Friday's fall. Generally, as I told last week, the gold is in a very soft uptrend, and this we can probably see this uptrend here, especially if we can, if the gold will be success to hold this area, like the gold creating the area on the 100 800 1800 and almost and 100, yeah, between the 1800 810 and 1830, 1830. If on 1800 and 1830 the gold can will be success to hold this range, then we're going to see much more higher levels. Generally gold is trying to get in a soft uptrend from here. This is about the gold. And the oil earlier today printed the new record high in 2021, and that was one of the main reasons of that was the much more demand, more demand than expected. The market has the more demand, and it shows that the economy is improving, and the factories and industrial production, factory production is fine. And you know what? Even we have not just the less supply of the oil, we have even the less supply. We have unbalanced supply on the barrels as well. So with the empty barrels, you cannot find the empty barrels. The empty barrels price is trading twice more than last week's. So that's the reason to see that the oil in a higher levels, and still we are positive about the oil market with the higher demand in the market, with the higher expecting with expecting a with expecting a higher demand in the market and improving economies. So this is the general expectation for the oil from technical and fundamental. Both sides we are expecting to see oil even in higher level, especially for the short term, as long as it is trading above 80, 81 $20 US oil. For the stock market, the stock market, US the cash market today will be closed earlier. Generally, because of the holiday in the US, we have a less liquidity. We have the lack of the liquidity in the market, and lack of the liquidity with the market situation, it will be a little bit harder to guess what is going on and what we are waiting for. But generally, the data that showed last week is the data that we had the last week. It was not the data that we can expect uh, the Federal Reserve to go much faster to the hawkish policies. Yeah, we are waiting for the hawkish policies, and hawkish policies means for now most probably holding the current policy of decreasing the, more hawkish policy. The current hawkish policies probably will go on, and but with this data, it will be a little bit unlikely to see the rate hike on March. That is the reason that we can see a little bit uptrend, and that we can see that the side movement will be limited, and we will see the downtrend. Sorry, we can see the downtrend will be limited, and we can see the side movement with the side movement, even with the higher tendency, with increasing with the bullish tendency. Same thing we can see for the Nasdaq and Dow Jones. But don't forget that we are in a very important weeks this week and next week as well, especially these 2 weeks with the earning reports. Today we don't have that much important earning reports, but tomorrow Bank of America, Goldman Sachs, and Charles Schwab will be opening. They will publish their earnings this week. Because of earning reports, much more focus will be on earning reports than the Federal Reserve policies, because the Fed meeting also will be next week. So before next week of Fed meeting, we have to follow the earning reports to guess what is going on in the market. So far, the earning reports, they were positive, so we can expect the higher levels in the stock market as well. On the cryptocurrencies market, if you remember last week on a Monday, we were talking, and I told about the Zite movement. We are talking about the Zite movement between 41 and 46K, and still we are at the same situation. However, we can see lower lows in the daily chart. The lower lows are a little bit higher, but this lower lows being higher is valid has been evaluated at 43,600. Therefore, this our first resistance comes here something around $46,300, and under $46,200 downtrend will be, the bears will be very, very, very powerful. If this bridge, if we have the 43,300 above, will be downtrend will be less likely, and above 46K we can change to the uptrend. This is the currently, but the overall market situation, market expectation still is negative. We still do not have the specific news or anything that we can say, okay, that is the news that most probably gonna change the market, or that is the news that we can see higher trends from here. So, and therefore, the news still is nothing yet we can count on them for the uptrend. Therefore, the overall downtrend tendency is still in the market. Same thing we can see for the Ripple. Same thing we can see for Ethereum, and we are in a real downtrend for the moment, for today and this short-term market. The Euro USD, Euro last week increased above 1.14, but however, the thing is that the US dollar expectations from US dollar and higher trends from US dollar will be limited. The bulls in the Euro USD chart. Same thing going to happen in the GBP USD for 2 days, and next days we are waiting for the side and the downtrends in the currencies. In the currencies that they are trading against US dollar. This is the general expectation, market expectation, and the market situation. Don't forget that the US 10 years bond yields increased again to 1.80, and this can limit the gold bulls as well, and it will be positive for the US dollar index. Don't forget about that the US 10 years bond yields trading almost in 1.80%. It is increasing because of the market situation. And last December data shows that the the market didn't. One of the reasons that December, that's the one of the reasons that we see that the December we had a lot less demand for the bond yields. Okay, guys, thank you so much for watching this video. Hope it was useful for you. And see you guys again tomorrow morning, in the your time, or tomorrow, whatever time that you are. See you guys again tomorrow. Don't forget to write a comment. Let me know your idea about the market, about these videos, and what you want me to cover more for you guys. See you guys. Bye.